Hello, welcome to this installment of the Toy Storage Nation series TSN Conversations Unplugged. This series is based on questions we most often get at Toy Storage Nation. Today's topic is investment opportunity within Class A boat and RV storage for those who don't want to develop themselves. Today's participants are Devin Beasley, Executive Director, Capital Markets, Recreational Property Advisor, Cushman and Wakefield, Troy Bix, founder of Toy Storage Nation, Inside Self Storage, and former president of the R3 division of Janus International Group, and James Reid, CEO of Investa Capital, StorCo Storage, and BBI Constructors, as well as host of the Self Storage Clubhouse group. Thank you all three for being here. Before we begin, I was hoping the three of you could briefly introduce yourselves and give us a bit of background. Devin, can we start with you?
Of course. As Amy mentioned, Devin Beasley with Cushman and Wakefield started Recreational Property Advisors with Cushman and Wakefield in November of 2024. But prior to that, a self-storage advisor for 9 years, RV and boat storage advisor for the past 4.5 years. So just growing our brand and enjoy being part of the Toy Storage Nation crew.
Thank you, Devin. And I am going to ask you, can you tell us a bit about the new group that you recently formed?
Of course. Like I said, in November of last year, myself, my partner Kim, we started a group called Recreational Property Advisors, or RPA, and we're focusing mainly on the RV and boat storage space, marinas, and RV campgrounds and resorts, and a few other really niche product types that I'll share with you at a later date. But definitely excited about where this space is heading to.
Thanks, Devin. And Troy?
Hi, everyone, and thanks for having us, Amy. You're missing out on the snow up here, so and you've always said less of me is more, so I'm up here going to be shoveling tonight. But anyway, I started my career in 1986 with Hardy Good in Minico. I was on the Messenger magazine and helped grow that publication. In 1991, I started and launched Inside Self Storage, which became the largest print, live event, and digital platform for self-storage globally. Left them in 2017 and started with Janus International, launching and helping out on the R3 side, restore, rebuild, replace. And now I'm on Toy Storage Nation, helping out and looking forward to a great 2025.
Thanks, Troy. And James?
Absolutely. Well, thanks, Amy, for having me on today. And a little quick backstory. So I was a landscape contractor growing up, and I built my first development back in 2010. I was living there, working there, and one evening it caught fire, and I lost my house and my business overnight and my income. And my friend who had a storage facility let me use it, and I realized there's a lot of ways to help people going through transitions and self-storage, death, divorce, loss of loved ones. And with my faith background, I always wanted to find a way to give back. And storage is a great way to meet people where they're hurting and where they need help. And so since 2010, we've been on fire for storage, building our platform for self-storage, StorCo Storage, BBI Constructors, and Investa Capital is another way that we're able to invest behind our investments with our investors. Very thankful to be in the industry, and with the boat and RV is also part of our asset classes as well. And so I'm just thankful to be on the call, but it's all unique how we all get here, and coming together as a community has been a big help for us. And so I'm excited to be on the call today and just share more opportunities that this asset class can bring to us.
Thank you all for being here. I know you are all very busy. So I'm going to go ahead and get right into the topic. And this is a question I am getting more often. Folks that have seen all the information out there, why investing in boat and RV storage makes sense. I think we've been doing that for the last 3 or 4 years and getting that message across. But they themselves don't want to go through the development process, or they're looking for assistance to go through the development process. They have the money. They know this is something they want to get into, but they're not wanting to be part of the day-to-day. So I thought this would be an interesting topic. I think we're going to start to see more of these types of questions come about as the awareness of boat and RV storage is getting out there. So the first question I wanted was a more general question: is what is your outlook for 2025 for the boat and RV market? And if you do want to pepper in there a little bit about why it makes sense for investing in 2025, that's great too. Does someone want to take that one on?
Hey, I'll start. And I want to back up, Amy, if it's okay with you, and kind of give a quick tidbit on the first question you asked. I have limited experience, but a few years ago, one of my great friends, Mel Holsinger, and I bought a couple of old facilities, one in Lakeside, Arizona, and one in Tucson, and we fixed them up, basically R3 them, restore, rebuild, replace, and sold them and made a nice profit. And that was a whole different experience for he and I. And I have some limited experience on going on the new side and developing. And with entitlements, deadlines, things that can go wrong, and unfortunately, capital calls that you didn't expect, that can be a tough way to get in the business. I think it's about risk and reward, really, what you want to do in that regard. But they're two completely different processes, and you need to do your homework, understand what partnership agreements look like. You understand your partners, of course, understand operating agreements, all the legal sides on the development side, maybe a little bit more than the investment side. Moving into 2025, I mean, I believe it looks great for the industry, and I'm going to get off the soapbox here. I've got a couple of data points. The RVIA release in November that they reported 24,000 Class A boat and RVs built. That was just 1 month. If you do a little math, and let's just say each facility is about 400 units, that's 60 facilities a month just for that particular month of new rigs that came out of the Midwest. You multiply that by 12, it's 700 sites. The unique thing here on these stats are that's just boat and RV, or just, excuse me, RV. Boats have the same similar metrics. So there's a big undersupply, to say the least.
Thanks, Troy. And James or Devin, do you have anything to add as far as where we see the market going this year, next year versus perhaps last year?
So I agree with Troy. You know, the conversations I've been having with a number of groups, both on the equity side and the operating side, it's positive right now. Of course, I think the biggest hiccup we're facing right now is honestly where the economy is going and how that is going to affect acquisitions and or development moving forward. Or is the cost of construction going to go up? Is the cost of labor going to go up? You know, and nobody truly understands that right now. So I think that is putting a little lull in the market as people try to navigate and figure out how to navigate, you know, either acquisitions or refinancing or whatever it may be. I think the first quarter of this year, we're kind of seeing it right now, it's going to be a little bit slower as far as acquisitions go. Development, same pace. But as we figure out, you know, as people start understanding a little bit more of where the economy is going, I think the second quarter, moving into the end of the year, of course, will be pretty strong for the RV and boat storage world.
Thanks, Devin. And James, did you have anything to add?
Absolutely. So I'm more heavy on the development side as well. So when we're chasing and following after new builds, when I say new builds, we're chasing households. And so as these new developments get developed, a lot of them have even more stricter restrictions where you can't store your boat or your boat in or around your house. So when we're looking at markets that have growth patterns, that they're getting more strict. So from a storage perspective, we're looking at markets that have a growth pattern that we're wanting to follow within our buy box, but every new development tends to have some form of restriction that helps us as developers and storage owners because they have to store their products somewhere. So when you're looking at the forecast of what development looks like per home, per household, it's also a very good thing for our industry because they're gonna have to store it somewhere. And as our culture, you know, we like having fun. We like our toys. We like going out, and unfortunately, we can't park it in our parking lot or in our driveway anymore. And so, for those strict restrictions, it's actually an insulator for us as operators and builders that it's a good market for us to be in.
James,
Thanks, James.
I'm sorry, I'm going to ask a question real quick.
Go ahead, Devin.
Yeah. James, are you seeing, you know, as you're chasing these developments and new communities, are you seeing pushback from those municipalities as far as new construction goes for storage and RV and boat parks, or does it really depend on where you're trying to build at?
That's a very great question. I think that the overarching, they're starting to accept storage a little bit more, but they're asking us to do more covered, where they don't when you drive by, they don't want it to look like storage. They don't want it to look like a parking lot anymore. So a lot more fencing requirements, decoration, landscaping. So I think they truly understand that there's a need. It's just how much can they pressure us to make it look like it's a not storage of anything. And so that's been the interesting journey. And you have to be careful. And that's why we're talking about investing, finding the right operator to understand, navigate through that channel. We hire zoning attorneys to navigate that process for us, because, a city can put another 100 to $1 million expense on your development. And you need to understand how to navigate that to make sure that you're not overspending just to say yes to someone. And so it's been an interesting journey, but thankfully we have a great team behind us. But that's one element that we're always chasing after.
Thanks, James. I do get this question, and because I do get developers from other areas or investors who are currently in the retail space, multifamily, and traditional storage, coming over into the boat and RV storage world. What would you say as far as those markets compared to this market with opportunity? Is there a reason they're starting to chase this market?
I'll say that HOAs are, we are beholden to them in many neighborhoods, and that trend is growing. So if these 24,000 RVs that were built in November 2023 are beholden to an HOA, that's a lot of toys that need to be stored. So, we can go over the pandemic just quickly. I was watching the data during the pandemic and saw that these Class A boat and RVs were being built at record numbers. Shifts were running 24 hours, but the media didn't cover it. And it was fascinating to me to watch these stats come through. And I was thinking, oh boy, this is the time that I really feel boat and RV is going to come out of the dark and into the light. It's no longer the back part of the facility with the gravel lot. And you pay me $50 and we hope no one breaks in it. It's come to a new level because of the amount of boats and RVs that were built during the pandemic, and frankly the level that of these class boat and RVs. These are very expensive diesel pushers with matching boats and those sorts of things, and you don't typically want those in an open lot exposed to sun. You want a Class A facility, and right now there's less than 1,000 true Class A standalone facilities, and that is pavement, uh, either enclosed or canopy, gate, and fence. There's less than 1,000 of them. You look at self-storage today, and there's probably, you can argue there's 80, 90,000 facilities. So this is a market that I believe will trend for quite a while, and I believe that we're undersupplied.
To Troy's point, and he made definitely a few good points there. The competition in the other spaces is hot, right? Retail, multifamily, self-storage, very, very competitive. And the cost to get into that space, the returns that people are seeing are not as wide as they used to be, right? The IRRs that they're trying to achieve, the return on their equity, et cetera. So you're starting to see a lot of these players that were in those the other product types starting to move over to RV and boat because they are realizing a greater amount of return on their capital. So I think, like I said, to Troy's point, we're going to start seeing more and more of these multiple different product types moving over into this arena, and get it while the getting's good, I would say, just because as soon as Wall Street money gets into this space, of course, everybody else is going to recognize the space. And then that delta of returns that people are seeing currently isn't going to be as high, 5 years from now.
Agreed.
I think Troy brought up a good point too. Like from a overarching market, this isn't a $10,000 trailer anymore, or mobile home, or RV. This is, 100 to $1 million assets. And so even the clientele and the clients buying these RVs and boats, they're valuing their toy or their product a lot higher. They're wanting it to be in a Class A. They want it to be covered. They want to maybe be fully enclosed. And so that's shifting some of the development as well, because it's a much higher product of being stored, but also a much higher product that needs to be built to secure. If you pull up a $1 million RV, you want that Class A building. You want it to be fully enclosed. You want all the additional amenities. And so what Troy brought up is huge, because that's what's also a big change, that this isn't no longer, chain link and gravel. This is a fully more unique asset class, and it's always involving to getting more and more in the Class A perspective. So great point on that, Troy.
Thanks, James. So if someone is looking to invest in this market and get into the Class A boat and RV market, they themselves aren't developers. There are a number of ways for them to enter. And one, Devin, I'm going to throw out to you first, is someone who comes in and says, listen, I don't want to go through the entitlement process, the development process, and all of that. I want to purchase an existing facility. Either, I'll give you two scenarios. One is they're saying they want to come in and purchase Class A from the get-go. Is there opportunity still out there? And two is they understand maybe they're going to have to buy a BC facility and upgrade it. Can you kind of walk us through the opportunity there and what you're seeing?
Of course. There's opportunity definitely to buy Class A, right? But there's not, as to Troy's point again, there's not as many opportunities as there are B and C, because there's not as many properties out there. So you will be competing. If it's an on-market listing, we will be competing against a number of other groups trying to acquire this property. And that value that you're going to have to pay will be more substantial than if you were chasing a Class B, C property. I know a number of groups right now, because there aren't a lot of Class A on the market right now, that they're acquiring BC properties, doing value add, adding canopies, adding amenities to bring them up to Class A to meet the requirements of their investors or their partners. As to James' point, as more and more of these Class A facilities are built, we're going to see a lot more opportunity to acquire, because a lot of the equity of the partnerships that I'm talking to, at least, they're not long-term holders. They're 5 to 7 year holders and looking to flip out of those properties and then build up their portfolio again. So the opportunity is coming, it seems like, on a monthly basis. It's just taking a little while because, James, the developer, it takes a while to get your entitlements. It takes a while to get it out of the ground. It takes a while to lease it up. But once it's, late stage lease up or stabilized, that value's there, and the end owner is going to realize that.
Thank you, James. Or sorry, Devin.
No worries.
I saw James was just unmuted. Did you have something to add?
Back to Troy and Devin's comment, I'm just here thinking as well, when they go to buy that Class C or Class B, there's things that they can do to bring that closer to a Class A. You can take that gravel to asphalt. You can take that old fence and upgrade it. And so it's a unique way to actually get into something in a reasonable cost, and then take a proactive approach and actually start to do enhancements, where in storage, it'd be hard to remove a building and make it into a Class A, where I feel like with the boat and RV storage, you could take those parking lots and convert them in more of a higher class aspect. No, that's market driven, numbers driven, but I think from a valuation opportunity, it's there for them. And so I think it's a pretty unique opportunity for both investors or operators to look at that as an option.
Thanks, James. With regards to, and we're talking about upgrading, but even development from the ground up. So say someone wants to come into this market, they understand they're either going to need to buy a facility and upgrade it, or they're going to need to start from scratch, but they don't want to do the day-to-day. I would think there's ways of partnering with the developer where they're kind of taking on the whole process for you, or a consultant. Can you tell me about the various options someone might have if they don't want to be the day-to-day person on a project?
Yeah, Amy. So I think there's several options out there. So if it's an investor that's looking to invest behind an operator or a developer, the big part is just doing the homework on the sponsor, and the sponsor would be considered the operator, the developer. And so just understanding who they are as a company, make sure they're in alignment of what they're looking to do, and they can partner or invest alongside of that operation or the developer and understand what they're building, what their main plan is. And so there's someone out there that has capital, like for ourselves, we raise with invested capital, we raise capital to build boat RV storage facilities. And so we educate our investors on ways that they can partner with us, invest with us, return more of a long-term hold as well. But there's a lot of investors that want to be in the space, but a lot of them still have, their 9 to 5. They still have these very important jobs to roll, but they want to diversify their assets and their investments. And so as a sponsor, as myself, the goal is just to educate our investors. And so investors on this call today, just understand who you're investing with. They can turn a really good deal into a bad deal if they're not a very good operator or developer. And so it's really important for the investors to do the homework to understand who that investing firm is or that opportunity. But it's great. It's a great opportunity to broaden diversify their assets and be part of something great, as we talked about earlier with this investment vehicle.
Thank you, James. Any recommendations, and anyone jump in on this, on finding these types of partnerships or funds that are out there? I understand someone could have the backing, go to developer and say, hey, I want you to handle the day-to-day for me. But as far as opportunities for funds and that type of thing, is there anywhere someone can start to, if they're interested in becoming an investor, is there a place they can start to look? Or is it all word of mouth at this point?
Well, you've got the various capital companies out there. It's unfortunate Neil couldn't be on the phone with Madison Capital. There's Cox Capital, of course. There's a lot of those companies out there that are qualified and would do a real good job for you. And again, what that does is it keeps you out of the day-to-day typically. Maybe your return isn't as great, but you're not going to have the brain damage on the development side at times, because I haven't seen anything on the development side ever actually work out on a deadline. So it's not for the faint of heart. Yet the other side of the fence could be a lot higher return. So it's really what works for you, what works for your family. But there's a lot of folks that are getting into business as we speak that will unveil who they are going into 25, that will be that investment opportunity for you. And then there's the old school, find a piece of property yourself that's 8 or 9 acres and start to pull some things together to get it done. They're out there. Again, the risk is higher. When you plan these big asset classes, oftentimes you get if you're a deadline oriented person, forget about it, throw it out, because those deadlines typically aren't going to happen. And be careful again with your partnerships and what that all plays in regarding contracts and agreements and those sorts of things. The industry, if you look again, I love the data part of this business. There are 27 million households today that own either a boat or an RV. Those are gigantic numbers, and regardless who owns these boats and RVs, they have to be stored. So if the economy starts to dip and you need to get rid of it, and your boat or RV, it still has to be stored. A couple of really good things, I've talked to owners and operators through the years, and they've actually told me that in 10, 15 years of owning their Class A boat and RV, they have never had to collect rents. So you have a little higher demographic of tenants that hey, if you want your toy, you better pay me. So I think that's another big benefit. And the ancillary products and services are just starting to evolve in this business as well. So it looks really good. Is it easy? No. Is it foolproof? Heck no. But if you want to follow the data and follow the RVIA, which is the Recreational Vehicle Institute of America, they're posting these numbers. They're not coming from REITs. They're not coming from any manipulated side of the business that's trying to tout numbers. They're coming from the nonprofit association and telling you exactly how many of these units are being built each month. Well, take 80% of those or more, they're beholden to an HOA. They're going to need to be stored. So a lot of good things, but of course there's risk.
Also, sorry, I didn't mean to cut you off, Amy.
No, go ahead, Devin.
No, also, if somebody's looking for a partner, whatever it may be, it starts with the conversation, right? There's so much new equity that is looking at the space from institutional to family office to private, whatever it may be, and we can't track it all, right? A number of these groups, like we talked about previously, are coming from different arenas of product types, and they are trying to understand the space as well. They want to put a large amount of money into the space and back their partnerships or back their operating partners, but they're still trying to wrap their head around the economics of the industry. And as they start to understand it, they are going to be looking for partners, whether that be an investment fund or down that route. So honestly, it starts with a conversation. Call one group. They might have introductions to another group. Talk to Toy Stores Nation board, of course. Go on the website.
Yep.
But it always starts, in my opinion, with a conversation, because you're going to uncover some type of information that will help you out moving forward.
Devin, are you finding you're starting to get, when folks are approaching you, you know, I'm sure it's individuals, but over time, are you starting to see more of these groups and funds and, you know, that type of thing approaching you?
Yes, because the economics make sense.
Yeah,
For RV and boat, where
yeah,
it still makes sense in other product types as well, but not as much as it used to when it wasn't as competitive as it is now. Now, I'm not an expert in any other product type, so take what I say, please, with a grain of salt. But the economics for RV and boat storage make a lot of sense for these groups moving out of the more competitive product types right now into this more niche mom and pop product type where they can see a greater amount of return.
thank you.
Devin, I'm sorry, Amy, can I ask a question here?
Absolutely.
Hey, Devin, what's your stance on the entrepreneur out there that's driving down these highways and byways and looking for land? Are you involved in that? Do you have any comments on what your stance would be and ideas would be in that regard?
Yes, I am involved with that. I would say do your due diligence, right? Not every piece of land, of course, out there is going to work. Now, a lot of land in more tertiary markets do work for RV and boat storage just from the nature of the industry. You know, people want to drive to store. They're driving what they need to store, but you know, you still want to be highly visible. You still want to be a marketable product type that you're building. So get a good feasibility done prior to, you know, purchasing the land, because you don't want to spend, you know, 500 to north of, you know, whatever it is, $1 million or $4 million to buy a piece of property, build out, and realize it's not in a good location. So I would say first and foremost, get a feasibility done, and then go from there. But it's a much more I don't want to say free, but there's more opportunity in the space because you don't have to build in the top 50 MSA. You don't have to be on main and main for RV and boat stores. You can be in a more tertiary market that will work very, very well. You just need to do your due diligence, just like any other product type.
Thank you.
100%.
You brought up the term family office. That is a term this last year. Before this last year, I wasn't hearing it very often. I am hearing it on more calls and out there more than I have in a long time. And I'm sure it's been something that's always been around. Maybe I just wasn't hearing the term. But I have gotten calls from folks who they're part of, you know, their family office, and they're trying to persuade others within their family to, you know, take part in an investment. So they're really kind of trying to sell this concept. But can you explain what family office is, and has it always been around, and why am I hearing about it so much lately?
James, I'm sure you know this better than I do, but you want to take it, James?
Sure. So a family office consists of basically a family that has wealth. It can range from a ton of different amount of monies, but ultimately the family office has their own family that are trying to allocate funds into investments. And so the family office is considered like a small investment team or their own family. And so when someone says a family office, basically it's just a family that has wealth, and they're trying to find a way to invest in different asset classes. And so it's been more and more talked about because they're getting more and more diversified in their different asset classes. And we're starting to emerge more with the boat and RV storage as a very great asset class to invest in. And so, Amy, that might be why you're hearing it more, because it's catching more eyes. It's more in mainstream media now. And as Pratar spoke earlier, just the valuations are even higher. And so I think you're hearing more of that because of that. And so that's a high level, but they're a great family to work with if you're able to find them to invest with you. But there is several out there that are trying to get into our market, and it's a great opportunity.
Thank you. I'm going to cherry pick a couple questions here because I'm cognizant we've got about 5 minutes left of time, and then just I want to have you guys give your names and your contact information at the end here. One of the opportunities that folks go into are partnerships, where maybe they're investing and they're working with a partner. The partner is going to do kind of the day-to-day, and they're bringing some of the funds into that partnership. Are there any recommendations you have to protect yourself within a partnership? I don't know who wants to take that one on.
I view partnerships as basically getting married. You really need to know your partner. Make sure that you're both bringing something to the table. You're both bringing value to the partnership. And then just make sure that you have a good attorneys to review the documents. And a lot of times when partnerships get formed, it's the honeymoon phase. We love each other, we like each other, let's work together. Yeah. But what happens when things go south? And that's what you really have to consider. Like, if this does go south, how do you protect yourself, or how is there a proper way of getting out of the partnership? Because you don't want to be at a fire sale at the very end of all your hard work you put in, and now you have to sell because you don't agree with each other. And so you do have to keep the end in mind. And sometimes the end isn't always pretty. There's times where partnerships don't work out. And so you have to think about the downside of it, as well as what's the proper way of getting out of the partnership if it doesn't go well. I think it's a great opportunity to partner, but it takes a lot of work knowing who you're getting a partner in. So I would always encourage, know your partner very well, make sure you're both bringing value. And then if it does need to separate, what is the agreement? Share or tell how the proper way to exit the partnership.
Thanks, James. Did anybody else have anything to add on that?
James pretty much killed it on
You
my
got it.
end.
Yeah,
So,
pretty much.
yeah, he killed it.
So last question is coming up from the other side. And this one's probably answering itself, but if you are wanting to work with a fund, what makes from the fund side an attractive investor? Are there times where you may get someone who is wanting to be too involved in the day-to-day at times? What do you seek out from the fund side? James, maybe that one's, I don't mean to be pushing everything towards you.
You're okay. So just to make sure, are you referencing to a fund where they can invest in a fund?
Right. Or if you're looking for investors, what makes an attractive investor? And I know it's not just always about the investment, it's also, understanding how it's going to work, right? The day-to-day. Are there some times where it can be involved in the day-to-day, or do you prefer them not to be involved in the day-to-day?
Yeah, so from a clear passive investment, they're going to be not involved with any of the day-to-day. They'll know from our different reports what we're doing from a team perspective and product wise. But typically a passive investment, they are trying to diversify their investments into a vehicle like ourselves, where we raise capital, we invest in self-storage and boat and RV space as well. And so they're clearly passive. They get, basically mailbox money. They get it quarterly or whatever the structure may be. They get updated on the asset of what we're doing. If we're building, managing, they get updates. But the ultimate goal is we help our investors control where they put their capital. And I think that boat RV storage is a great place where they can place a portion of their investment capital in with a firm or in with a development company to reach these returns that our industry has. I think it's a great industry to be in right now and has very long-term growth as well. And so after they find the right partner, when I say partner, maybe the right investment firm they can work with, just continue to invest capital with them and see them grow and see those developments grow. And so if they're wanting day-to-day, it's probably going to be more partnering with somebody on a plan or a business plan. If they truly are passive, a fund or a single asset raise be a better way for a passive investment for the investor.
Thanks, James. Did anybody, and again, you covered that, the full breadth of it. Did anybody have anything to add there?
No, James said exactly what I was going to say. So good job.
Yeah, I have to agree.
Got it. Got it. Well, I would continue this conversation all day, but I know we are limited on time. You are all very busy folks here. So what I want to do is I want you, if you don't mind, to give your name, your company name, and your contact information in case anyone out there has gotten to this, and is wanting to connect with you. And also if there's anything we didn't cover that you think is real important on this topic, briefly. So Devin, we'll go ahead and start with you. And I know you're on a time crunch here. So if you do need to leave, I want you to go first.
They haven't kicked me out yet, so we'll keep it going. But no, like Amy said, Devin Beasley, Recreational Property Advisors with Cushman Wakefield, advisory, brokerage services, all the above. Honestly, just love meeting new people, meeting new investors, new developers, new acquisition specialists. So you can reach me at any time by my cell phone, 703-795-9942. My wife hates that I get calls at all times of the night, but I do. So I don't mind. I always pick up my phone.
Thank you, Devin. And Troy.
Yeah, this is a industry that's ascending. There's no ifs, ands, or buts about it. The pandemic created a bunch of recreationalists. That was the good thing that came out of the pandemic. It's a $24 billion industry today, expected to double in 10 years. And the numbers are, you can get them in all places, especially with the RVIA. I'm Troy Bix, troy.bix@toystoragenation.com. Or you can reach me at 928-864-7440. Would love to hear from you if I can help you.
Thank you, Troy. And James.
Yeah, no, again, thank you for having us on the call today. And most of them knew my backstory that I gave this morning or actually earlier in the call. And so I'm with Investa Capital and we're impact beyond returns. So even though we're chasing after returns for our investors, we're finding ways to give back and make impact. Just as my story this earlier in the call. I love people like Devin talked about. Like I love connecting people from development, investing, managing. That's what we do within our different divisions of our companies. And so there's others on the call that just want guidance, feedback, help, investing or building your own facility. I think our team can help them. My number is always available. James Reid with Investa Capital. My cell is 314-250-7000. And a great way to email me is james@investa, INVESTA capital.com. So definitely appreciate being on the call today, Amy.
Thank you, James. And my name is Amy Bix. I am president of Toy Storage Nation. As Troy mentioned, he's the founder of Toy Storage Nation. So he had the insight of where this market was going years ahead. So we're very lucky that he saw that opportunity. Toy Storage Nation is an education media brand that focuses on the Class A RV and boat storage market. You can find a ton of information, content, case studies, articles, you name it, at toystoragenation.com. We also do full day workshops. They're very intensive. We cover every topic you can think of from A to Z that you will need to know, from investing, feasibility, construction, marketing, security. We also do a facility tour during those days. You can find all the information for our workshops at our website. Our next one will be taking place April 25th in Las Vegas. You can reach me at 602-909-3910 or at amy.bix@toystoragenation.com. I want to thank all three of you so much for your time today. We're very lucky to get to pick your brains and your insight and expertise. So
Thanks, Amy.
Thank you all.
Thank you.
Thanks.